Hello. Let's see if we can get some people to join us. We'll just give it a second. I was having some technical difficulties. So hopefully we're good now. Okay, it looks like people are coming in. Hopefully we're good. I was having a little bit of trouble. Hence why I am late right now. Let me just check one more thing before we get started. So we'll get started here in just a second. All right. Okay, good. I see it. All right. I think we're ready to go. Okay. All right. Looks, we got a couple people in here. So why don't we go ahead and get started? I want to see if I can find the chat real quick. So just give me a hot second because this is new for me. Looks like I can't see the chat. So unfortunately, I don't know what is going on. This is my first time streaming on this particular channel in a really long time. And it looks like I might be having a little bit of issue with my chat. So I'm going to try to open it on my phone, which is going to be a challenge. But let me just see if I can do that real quick. Okay, so I can see the chat on my phone, so this is going to work. So at least I can see you guys talking there. So really quick, if you can just comment where you're from so I know who I have in here. And I'm just going to kind of walk you guys through the purpose of today, our conversation, what my goal was for the conversation today. I don't want this to be too long, so I'm going to do my best to not, run on and belabor the point like sometimes I can do. Hopefully you can see my screen okay. That was actually what I was having a little bit of trouble with. I'm streaming through some software called OBS, and this is my second time showing my desktop through OBS, and it was giving me so much issue today. I thought I was good, and you just know how sometimes that can be. So we're going to have to just bear with me just a little bit as we get into it. But today we're going to focus on very, very, very easy softballs. I say easy softballs. These are like the things that are the things you must know when you first get started trading the strategy that I trade. We're going to basically throughout what I'll be sharing with you all, talking about what I do, how I trade. I'm just going to show you things that I have learned from ICT, and I will also reference you guys back to ICT for, exactly how he explains it. And I kind of gone back and forth over the last 2 weeks since I put up the start video on if I want to try to explain things exactly like Michael explains it, or if I want to try to explain things to you guys how I see it in my head. And I think it's better and easier for me to focus on how I see it in my head. And then I'll always refer you back to Michael. So you can go back to Michael, watch the video where I got this. But with the screen time that I have had, there's just little things that I've kind of incorporated or ways that I understand it in my head that for me make it easier for me to, in quote, believe what I see. So I hope that makes sense. But in what I'll be sharing on my channel, I'm just going to be focusing on how I see it in my head. And then you guys will be able to go back and see it in his videos as well. I think the last thing I just want to spike out before I start getting into it is, you definitely have to put the work in. So I just want you guys to, use this as inspiration to kind of help you get started and know where to go. But at the end of the day, you really have to own this on your own. All right. So I just really want you to, take that ownership. Make sure you are spending the time to, to master this on your own. This isn't something I'm going to act like is easy. This took me a long time to figure all these things out, to learn all this stuff and to absorb it from Michael. But at the same time, you can do it. There's no reason why you can't. If I can learn this, you can learn it. But I just don't want you to think this is something that's going to happen overnight, even though I'll try to do my best to give you shortcuts and to help you with, getting through these things quicker than you maybe would have if you hadn't gone, this route. So with that being said, we're going to go ahead and get into it. I did want to show a disclaimer, and unfortunately, I don't have it up on my screen. But the biggest thing I want to just emphasize is trading has risks. By trading and doing anything and taking away anything from this conversation, you're basically assuming the risk for yourself. So you have to own the risk for yourself. Trading is what's the word they use? It's basically a zero-sum game, which means there's a loser for every winner. There's always going to be a loser on the other side. We don't want you to be the loser, but you have to accept that risk. So I just want to make sure that you fully appreciate that. There will be losses. Losses are a part of the game, and you have to own the risk. You have to do the work. You have to do the due diligence. And, I just want to make sure you fully appreciate that before you get started. So with that being said, let's go ahead and get into it. I see a number of you guys, and I know I've said that a couple times. So let me just start there. So I think the first thing you really have to appreciate and understand if you're going to learn what I've learned from ICT is that ICT teaches that the stock market is run off of an algorithm. You truly have to believe this, in my humble opinion, to be successful trading ICT methodology. If you do not believe this, I think it would be very hard for you to trade this methodology, and it may not be for you. This way of trading is not for everyone. I'm going to repeat that. This style of trading is not for everyone. This style of trading does not rely on indicators. This is how I started. I started with indicators. I now only use indicators to chart for me, meaning to chart things that have happened in price action for me so that I don't have to chart them myself. I do not use indicators to tell me what price is about to do. As I read price via a naked chart, and I make assumptions based on what I see in the chart as to what I think price will do next. But I just really want to spike out the fact that ICT's trading style and what he has taught is that the stock market is run off of a computer, an algorithm that is just like what you think about with Instagram and how Instagram shows you different things. It's just a different type of algorithm. Just like YouTube has an algorithm to recommend videos to you. The stock market uses an algorithm. And you'll see it, and I began to believe what he taught when I saw the level of precision that this model, this trading style will give you, because it is a computer, and computers have rules. And that to me is what really resonated for me as to why I really became to trust this, because this is not just something where you happen to just catch a move. You can anticipate moves based on what is printed on the chart, because it is a computer with rules. And I believe this wholeheartedly because I see it every single day. But again, if you have a hard time believing this, again, it may not be for you. And that's just something I want to preface this with and just start with, so that if you start to feel like, you know what, I'm just not buying that, that may be a time where you have to decide you may have to find another strategy. Okay. So we just want to first start there. So it's the precision that comes with ICT methodology. And I see a question, what made me choose ICT? It's exactly that. It's the precision that comes with ICT. I work in medical devices and healthcare. In healthcare, you deal with the FDA. And then with the FDA, you have to be able to prove things as being fact. This resonates with me because it's a fact. Whether people want to believe it or not, whether they want to argue with you online about it or not, I see this every single day. I see the algorithm respect what it has printed. I believe there are rules, and I see it, and I love the level of precision that this offers. I feel like it's objective, meaning if you do this, this, and this, statistically, you are on the right side of being profitable. Whereas with other methodologies, I wasn't able to find that level of consistency where I could literally log on, look for something specific, see that thing happen, jump in and take money consistently every single day out of the stock market. So that is why, for me, I really appreciate ICT methodology and why I have chose and have stuck with this strategy. So with that being said, there are two things Michael teaches us the algorithm seeks. And I'm going to just type it on the screen for you guys. We're going to put it up here and let's make this a little bit bigger. So there's two things the algorithm seeks. Okay, so the first one is liquidity. All right, so the algorithm seeks liquidity. So you may be asking yourself, what is liquidity? Liquidity is money in simple terms. It's money that rests on the chart in the form of stop losses. So what is a stop loss? A stop loss is what people put on their trades to protect their position, to protect them from losing more money than they would have wanted out of a position that they put on the market. So let me give you an example. Let's say you bought Apple stock for $100 and you put a stop loss that says if Apple falls below $90, sell my position because I do not want to lose more than $10 a share. So you bought it at $100, you put your stop loss at $10 below, so you don't want to lose more than $10, which would be a $90 stop loss. A stop loss at $90 where if price goes below $90, your trade will be executed as sold and you will be taken out of that position. That is a stop loss. There are stop losses throughout the stock market for everybody who's trading. Not everyone trades with a stop loss, don't get me wrong, but positions have stop losses. They're all over the chart and we can see the bulk of where stop losses would be located. And it doesn't just include what we would call retail traders, people like me and you. Okay, there are big hedge funds that have money in. There are all different types of position sizes that exist out there, but the algorithm is seeking big money. They don't honestly really even care about us because we just don't really matter. We're going to get caught and slapped in the middle of it anyway, just to do how people think and how the stock market is driven off of your emotions. However, the stock market is looking for large positions and looking for their liquidity. So that's the first thing that price seeks. The second thing that price seeks is what we call imbalance. All right. So imbalance is when price has traded, and let's just say price, we'll use Apple again. So let's just say Apple went from $100 to $120. And in that move, price moved so fast that it created what we call an imbalance, meaning it went up. So you have a buyer's push. So the buyers push the chart up, creating what we call a green candle. And when that happened, because of the speed that it happens in, oftentimes it creates what we call an imbalance. What is an imbalance? An imbalance is when you have an imbalance of buyers and sellers. So the stock market has a rule that it has to operate on. And that rule is that it must have an equal representation of buyers and sellers on the chart. That is what makes the stock market believable and fair, is that you have equal opportunity, equal representation of buyers and sellers on the chart. If the chart only goes one direction and smart money is moving it in one direction only and it is not coming back to offer, in quote, fair value, and this statement will make a little bit more sense as we continue, to offer fair value to that imbalance, if it never came back, it would be considered rigged. People would look at it as being rigged because they would assume they did not give an opportunity for people like us to join the move. So this is why I like to trade this setup, because it's this simple. Price seeks liquidity and imbalance. So if you're able to read liquidity and imbalance, you have clues as to where the chart, the algorithm is going to seek, where it will return back to. Because again, it takes smart money to create imbalance because they have the money to move the chart. We don't have enough money to move the chart and to influence price like they do. So when we see these imbalances, we know that is where their money is resting. And they will come back for their position. They will come back. You don't know when, but the one thing you do know is they will come back, okay? Because the market has to be considered fair. It has to have equal representation of buyers and sellers. That is why imbalances are important. So today what I plan to do is I'm going to show you what a fair value gap, and that is what imbalance is called, what we typically refer to fair value gaps as. There are other types of imbalances. I'm not going to talk about those today, but there are other types of imbalances like a volume gap, for example. But we'll focus on fair value gaps in this conversation today, and liquidity in the form of wicks. Okay, so we're going to focus on wick liquidity. When you leave the conversation today, you should be able to identify a fair value gap, and you should be able to identify several types of the liquidity that I trade on a daily basis. Okay, so that's my goal for this conversation. I'm going to try to keep this really simple. And I think the last thing I want to say before I start showing you guys some things on the chart is that the way that I kind of want to walk through what I do in my strategy is keeping it simple and giving you what you need to be profitable in the simplest way possible. But I'll continue to explain to you the more advanced things that I use, and those things you don't necessarily have to incorporate to become profitable. For me, it just helps me to feel more comfortable and to improve my hit rate and to keep me out of times that, in my opinion, aren't the cleanest types of trading, the cleaning days to trade, the cleanest opportunities that you may find to take money from the market. Okay. So with that being said, I just wanted to spike that out because there will be times where we'll get a little bit deep down that, in quote, rabbit hole, and you don't have to go there. Okay. We're going to keep this simple for you. But if you want to go down the rabbit hole and you're somebody like me who just, gets more and more intrigued by this, I invite you to join me on that as we go deeper into this conversation. And we won't do that today, but I just wanted to give you that heads up. Okay. So with that, let me just really quickly see if there was any. Okay, no more questions. Good. So we talked about imbalance and liquidity, but first let's focus on liquidity. So I'm going to write on the screen several types of liquidity that I use. And I recommend that you write these down as well. And we'll walk through how to find them on the chart. But I want you to have this list because in the beginning, you're probably not going to just remember this right off the top of your head. So you're going to need to get a pen if you don't have one already and a piece of paper. If you don't have a pen and a piece of paper, take your phone, open up your notes, and write this down. But I do encourage you all to start a notebook for trading. And even if you don't continue with me, have a notebook that you use to study with, okay? But the different types of liquidity that I like to use, I use from a video. So the video that I learned, these types that we're going to go through first is called Michael's One Trade Setup for Life. Okay, so it's his One Trade Setup for Life. And let me make this a little smaller just so I'll be able to fit everything as we keep going. So hopefully you can still see okay. But this video is called his One Trade Setup for Life. And in that video, he references several types of liquidity that the stock market uses for day trading throughout the day. Excuse me. So one of them would be your Asia. There we go. Your Asia high and low. So that's the first one. In Asia, the time for Asia is your 1800 through, and what I use for Asia is midnight. Okay. So when I draw Asia on my chart, I'm doing 1800 to midnight. And I'll give you again the video that Michael references. I know some people use different times for London and Asia. I'm going to give you what I use and what I found success, and I trade using his One Trade Setup for Life liquidity every single day. This works for me. If you want to use the other time, you may find you like that one better. I definitely recommend you, experimenting and seeing what you like. But I like to use for Asia 1800, which is 6 p.m. to midnight. Okay, which on the chart is going to print as 0000. All right. The second form of liquidity I look for is London, high and low. Oops. And for London, I use 2 a.m. Eastern Standard Time through 5 a.m. Eastern Standard Time. Okay? So that's what I use for London, for my London liquidity. All right. Next, I don't chart this, but I do look at it, and that is your New York AM session, high and low. And New York AM session is from 9:30 a.m. EST to 11:30 EST. Oops, let me fix that. That's what I like to use. And then your PM session, I use 1:30 p.m. EST to 4 p.m. EST. This is my New York PM session. Okay. And again, this is high and low of that time frame. Sometimes the time frame in it, and I'm going to show you the range because we're using the high and the low. Let me put that here too. High and low, high and low. Okay. So I'm using the high and low of these sessions as well. All right. And then I just want to throw in here, I like to use previous day high, previous day low, previous week high, previous week low, previous month high, previous month low. All of these are things that I use, okay? And they're very important. And the easy thing about this, because I know you're probably looking like, oh my gosh, I got to remember all this. Once you start doing it, it'll become very easy. When you chart at the beginning of the week, the beginning of the month, you're going to chart those highs and lows on your month. You won't have to do it again for the rest of the month. Same for the week. You chart, I do my charting at least once a week for the week, and then I chart each day. But the charting you do on the weekend is going to be a little different than the charting you do each day, okay? So it just kind of is like these little things you do to get ready to set yourself up for success. And you will want to chart, and you're going to start to get into a cadence of doing your charting so that you've got everything you need to be successful when it's time to trade. But these are the liquidities that I use. So this is stuff I want you guys to write down, take a screenshot, you know what I mean? Make sure you get this, okay? So you want to write down these times. So real quick, I'll just give you a second to write down the times that I have listed here, as well as the different liquidities. Previous day high, previous day low, previous week high, previous week low, previous month high, previous month low, okay? You also will pay attention to the wicks from other periods, time periods that are near those ranges. And we're going to walk through that here in just a moment. We'll start at the top and we're going to work our way down. Okay? And I'm going to go ahead and get into that because, again, I don't want this video to be terribly long. And I do want to save time at the end to show you how to identify a fair value gap. So we'll spend a couple of minutes on that. I think that section probably won't take us too long. But I think looking through the liquidity will probably take a couple of minutes. So I want to spend some time doing that. So hopefully you guys got everything I have before I move it out the way. And we're going to go ahead and start looking for this liquidity. Let me move this as well. So let's start, and let me move, I'm going to take away everything up to 8 o'clock when the market opened on Friday. Okay, so we're going to do our charting just like we were starting to trade yesterday. Okay, so we're going to be using the Thursday night session, which is basically Friday morning, because when the candle opens Thursday night at 6 p.m., that is a Friday candle using futures. And I do want to mention, because I don't think I said this, I will be charting and talking about futures for most of our conversations. And I think for me, it's easier to do that, even though when I trade futures, I often do it in futures, but I also often trade SPY and QQQ, which are the stocks that are the sisters to what I'm showing you here. So this is NQ, the NASDAQ, as you can see behind the little watermark. And if you were looking at the QQQ chart, this is essentially the QQQ chart, but the futures version of that chart, okay? And I prefer to use this chart because this chart has all of the information from this particular asset. And what I mean by that is this chart runs 24 hours for the hours that the market's open. So there's basically 1 hour of the day that's missing, because that is the hour between 5 and 6 p.m. Outside of that, this chart is going to have the most information for QQQ. So when I trade, I always am going to use NQ regardless of if I'm trading QQQ or if I'm trading futures. So I just wanted to mention that in case you get a little confused, like, why are we looking at futures? You can take what I'm talking about here and you can apply it across any stock. You can apply it across any asset. All of this information is going to work for you regardless of what you trade. So this doesn't mean you have to trade futures. So I just wanted to make sure I mentioned that in case you're like, Kristyn, what are you doing? Okay. So I'm going to turn on an indicator, and you know what? Actually, let's do it manually. Let's do it manually because I think it'll be easier for me to show you. And let's start with Asia high and low. So first, I'm going to just throw some vertical lines on here so you can see where Asia starts. So if you look at the very bottom of the chart, where my little cursor, if you see my cursor moving, at the very bottom, you should see a date. It says Wednesday, October 16th, 2024, 10:30. So if you move this, you can see that changing. The time and the date is changing. So we want to move this to to Thursday. Well, I guess technically it would be Thursday. So we're looking for the 6 p.m. candle. So I want to find that 6 p.m. candle for Wednesday, which is going to be our 1800 candle. Here we go. Wait, I want to find the Thursday candle. Did I delete it? Because I said we're going to talk about Friday. So hold on. Give me just a second. We're going to do the 1800 candle. There we go. And because I've got it in replay, let me turn off replay real quick. Okay. And I think what I want to do is I just want to stop about here. All right. So we've got our Asia open Thursday, October 17th, 2024, 1800. That is your Asia open for Thursday evening, which is your Friday open. And yes, this is recorded. And then we're going to close this at here with our London, the end of our London session, our London overnight session. Okay. And we're going to mark our highs and lows for Asia. So Asia, remember, I'm only using till midnight for Asia. So we want to mark our high and low. So we're looking for the double zero. So here are double zeros here. So I want to look for the high and low of that range. And for kicks and giggles real fast, let me just draw this so you can see that range. We're going to just draw another vertical line real fast in the middle. Let's change the color. We'll make it orange. So this is Asia. This little range right here, this is Asia. Okay, so let's mark the low. So this is Asia low. And ICT calls liquidity at the bottom of the chart sell side. Okay, that's sell side liquidity. Okay. A cheat to remember that is you have to sell down to get your sell side liquidity. People are selling into that liquidity, right? So it's sell side, it's at the bottom. That's how I remember sell side liquidity. Buy side, you had to buy up. It bought to go up. So liquidity at the top of the chart we call buy side liquidity. All right. So that's the difference between buy side and sell side, just so you understand the terminology. Michael has names for everything. He tried to name things in intuitive ways where you'll remember them. But just so you remember, sell side's at the bottom. So this is our Asia low, sell side liquidity. Let's make this a little bigger for you. All right, and you see I took the very bottom of this wick. All right. Now let's mark Asia buy side. So this is Asia high, buy side liquidity. If I can spell. There we go. Asia high, buy side liquidity. And I like to put buy side at the top like that. Okay. So this is buy side, this is sell side. So that's the end of Asia. So now we got London. So London, for London, I use 2 to 5 a.m. So here's your London high. And I'm not going to write the buy side, sell side. You guys know what it is just for the sake of time. So we'll call this Asia low down here. I mean London low, excuse me. I don't think there's a wick at the end of that. I can't see. Let me move this out the way. Here we go. There is a wick. It's down here. Okay, so let's delete this because I don't think we need it anymore. So here's your London low. And I'm actually gonna just because my my eyes like to see the sell side at the bottom, and I put my buy side at the top. So anyways, you can see Asia, you got London here, and you've got London high here, and then actually at the end of this little, because I tried to end this before 8, it actually took it here. But these are targets. So this is what I do every morning when I get ready to chart, when I get ready to trade. I make sure I have my liquidity on the chart like this so I can see the liquidity. And we're going to delete these now because we probably don't need them anymore. But that's how you chart the liquidity. Okay, so hopefully that makes sense to find the liquidity. And again, you'll just have to like do what you got to do to remember those names, those terminologies. But just remember, buy side is at the top. You buy up. Green is going up, so that's buying pressure. This would be buy side liquidity. It's at the top. Sell side liquidity, selling pressure, selling down. Okay, it's down. Sell side liquidity. All right. So that's just the nuance. Again, you'll have to just do what you got to do to memorize that. But that is what, when you hear Michael refer to buy side, sell side, that's what he's talking about. Okay? So when we come into the day and the day is moving, we want to start to see price trade and come and take that liquidity. Now, Friday was a unique day. We actually were kind of in a little bit of a very slow moving trending day. So it did come down to take some liquidity. I'm not sure if NQ was able to reach it. We'll have to see here because I ended up trading ES on Friday myself. But you just pay attention to those pink lines. The market typically will seek that liquidity, just like I mentioned to you before, and will come back to take that liquidity. And I use that for my first step in my trading process. And we won't get into that today, but I do use the liquidity for me to help me determine areas of interest, areas to look for setups. I also use that as an indication of places the price should go and should not go. Okay. So this is all in the morning session. And this was a bit of a unique day. I will try to find an example before we leave today to show you where price actually came and took that liquidity. I do again think ES did leverage the liquidity a little bit deeper than NQ did on Friday, but I'll find you a really good example so you can just see on a clean day where price sets up beautifully to leverage that liquidity for the moves that it wants to make. But this is again just kind of showing you, and this is replay that I'm using in TradingView. So you're looking at TradingView here on my chart. I've been using TradingView for a really long time. Basically, I think since I got into ICT, and I really do like TradingView a lot. And this is moving so slow. So let me just see if I can speed. Okay, so I think that's it. So we'll turn that off for now. So let me just check these comments. Where will I be going forward during market open? It's always helpful to learn. Can you clarify that question? I don't know if I fully appreciate your question about where would I be going forward during market open. Yeah, I don't know if I understand. I'm going to turn on, though, my sessions. And then I wonder if I have my, not this one. I think it's this right here, session liquidity. So we're going to kind of cheat a little bit. Turn on my indicator. And we're going to delete my lines and we'll use my indicator. And let me just, I'm going to actually go back because we did have some really great examples this week of price using Asia and London liquidity. Let me just find a great example. Okay, here's a good example right here. I can see it with my eyes. Okay, so really fast, let's just do one more. So I use these vertical lines. I have this indicator called sessions right here. And I like to have this indicator because it helps me just visually see the sessions on the chart with my eyes. These white boxes are Asia. And then this green is lunch. Okay, so it just kind of helps me break up the chart a little bit with my eyes so I can visually just see very quickly. The chart already has on here 8:30 candle and midnight candles. Those are candles we'll learn and talk about later if you haven't already learned those things. But real fast, we're just going to mark Asia high, Asia low, and then I'll do London as a different color to make it simple. So we'll do London low. Remember, London is between 5 and 2. Just make sure that's not, okay, so we got Asia. So I'm just going to make, let's just do yellow for London and we'll do pink for Asia. And I want you to just see how the chart used those different liquidity. Okay. So we're on the 15-minute time frame. And I haven't named them, but just remember pink is Asia, which was made in the white. So we got our highs, Asia high, Asia low, London high, London low. Okay. You following me? And we're just going to follow with the replay, and we're just going to watch price seek the liquidity. And what we want to see price do is take the liquidity and go the other direction. So we just kind of want to see price use that liquidity to change directions on the chart. And I cheated because I picked this because I knew it did it. It's kind of a pretty clean day. But as you can see, price came and took London low. And we'll talk about this later, but it immediately created a fair value gap and went up and took Asia and London high with a wick. And we'll explain this term I'm going to use here later, but we call this a liquidity grab. It grabbed the liquidity with a wick and immediately crashed below it, creating a fair value gap. That is a signature we look for in the chart, okay? That is a liquidity grab. That indicates a specific maneuver or technique that the algorithm is going through. And that is something that ICT teaches us how to trade. So if you want to dig a little bit deeper into that, his 2022 model, you can search YouTube for ICT 2022 model. He walks you through how to trade that setup. That's an actual setup. Okay. But as you can see, price took London low here, immediately traded up, and then took London and Asia high with a liquidity grab, and immediately went down and broke structure to the downside with imbalance. ICT 2022 model, a liquidity grab, break a structure, retracement into said fair value gap. That is an entry for a short. That's ICT 2022 model is a setup. That is a setup you can trade with the liquidity that you use on the chart. Okay. So I hope this makes sense in terms of liquidity. Again, I've spelled out the different forms of liquidity you can chart and you can use. I really wanted you to be able to, one, understand different forms of liquidity, and also the fact that the chart seeks said liquidity as targets. That liquidity is what fuels the trade. It is what it uses for the move, okay? So that's liquidity. So we're going to go ahead and transition over to identifying a fair value gap and what a fair value gap is. I'm just going to pause real quick though. You guys feeling good? Can you guys just say in the chat that you're good? You're feeling good about this? It's making sense. And you may have to watch this again. And I'm trying to go slow just so you can get it. You may have to, watch this again. You may have to watch it a couple times to get it. Okay, but just let me know if you guys are good, if this makes sense. I want this to be simple. I want you to be able to catch it. I know it may feel like a lot, but it really is so simple. Price seeks liquidity and imbalance. You just got to know where the liquidity is, how to find it. Okay, so I'm going to go ahead and we're going to delete off these lines that I threw on here. And let's turn off replay. Let me just hit this, turn that off. Okay. Indicator I use to mark highs and lows. The indicator that I showed on the chart is called sessions. That's the one that basically I set it up, because you do have to set this up, but I set mine to show Asia as a white bar and lunch session as a green bar. It just helps me to see really easily the consolidation that takes place in Asia and see lunch. It just helps me split my day up. So that's the sessions indicator. And then I have an indicator I use for the liquidity in sessions, and it's called sessions liquidity here. Okay. And then if you want to have like some of the candles, we'll talk through candles in another conversation, but I use this custom sessions opening prices. This is an indicator, as you can see, that charts my midnight and my 8:30 candle for me. So I don't have to do it because I do use those candles with my trading. All right, so let's get into a fair value gap. We're going to go up in time frame just to see if we can get a big one. Let's do like a monthly. And we're going to move all this stuff out the way. So let's find a big one on the month to make it easy to see. Okay, so here we go. We got one right here. Okay, so fair value gaps. All right, so we're at 12 o'clock, so I don't want to spend too much time on this, so we're going to just get into it. So what is a fair value gap? A fair value gap is, again, it's an imbalance. So that's the first thing. And I should have brought that word down. Hold on, we're going to grab it. Let's bring that down here. So it's an imbalance. I wonder if I've got one. Yeah, let's actually use this one right here. This one's kind of ugly. Let me see if there's one cleaner one. You know what? Let's do this one because it's already been given sell side, but it's right here. So we're going to focus on this fair value gap on this candle right here. Okay, so this candle is from June 2023. It was created June the 1st. 2023 is the day that's marking this particular candle. And this candle has a fair value gap on it. And it looks like there was also another fair value gap below as well. So there's a fair value gap right here on this candle as well. But we're going to focus on this particular candle right here, okay? So a fair value gap is a 3-candle pattern. And it helps you to identify the imbalance on the chart, okay? It helps you to identify the imbalance in this particular range that price will seek to identify areas of, I guess you would say, a non-representation of equal buyers and sellers. I don't think I said that the best way. Let me try to see if I can say this again. It is an area that does not have equal representation of buyers and sellers. There is imbalance there, and imbalances also have liquidity attached to them. Okay, this one, you might miss that. And it took me a while to figure that part out because I don't know if that was obvious when Michael taught it, but I'm throwing that in there as a little extra caveat. Imbalances have liquidity attached to them, okay? So I'm just going to throw that out there and I'll explain what I mean before we leave this conversation today. However, an imbalance is a 3-candle pattern. And we're going to spell out the candle. So we're going to put a number 1 by the first candle. So this imbalance, we're using this candle as our first candle, okay? So we're going to mark this first candle. This number 1 goes with this candle right here, okay? And then let's put a number 2. And this number 2 goes with this candle right here, okay? And you know what? Let's just put it inside of it. I just wanted you to be able to see it, okay? But let's just put it inside. Okay, so that's candle 2. And then we have candle 3. Candle 3 is right here. So you got candle 1, candle 2, candle 3, okay? So that is your 3-candle pattern, okay? You are looking for the part or the range on your middle candle where candle 1 and candle 2 have not traded into. I'm going to say that again. You are looking for the part or range on your middle candle where your first and your third candle have not traded into. Okay? What is that telling us? The parts that the candles have been traded into, the part that middle candle has been traded into, has an equal representation of buyers and sellers. Why is that? Because you have a green, think about it like a paintbrush. Michael often uses the analogy of a paintbrush. You have a green paintbrush up. So think of paintbrush like swiping up. And then you have, so this is like a paintbrush swipe up. This candle opened. So basically price came down here, opened here, pulled down. So think of that as like a paintbrush swipe down, and then it went back up and closed here, okay? And I gave you guys homework, so if you don't know how to read candles, you're going to have to go and watch those videos I told you in that last video to be able to understand how to read a candle, because I don't want to have to spend time on that. I think you guys can go and learn that. It's a simple piece to add to your process, but you have to know how to read a candle to be able to do this, okay? So I like to draw these as boxes, but for this exercise, we're just going to use a trend line. Okay, so we're going to do it like this. So this candle came down, and this is the low of that candle. Okay. Oops. And we're going to take this and we're going to draw this out like that. So that's the low of this candle here. This candle's low. Y'all got that? And then we're going to take the high of this candle here. You got that? That's the high of this candle. This little thing, this is a volume gap. We're not going to focus on this right now. These are also forms of imbalance, though, just to reference it. So I'm going to actually draw just a box right here so you can see it. And we're going to just drag this out like this. Okay? That is what we call a fair value gap. Okay, you got it? That is a fair value gap. What is a fair value gap? It's a place on the chart where fair value is being offered. Why is that fair value? It's fair value because price traded up in one paint swipe up, and it needs to have a paint swipe come down to offer fair value. And we actually had two of them on this chart. So you got another one down here. So if we take this candle low, not to make your eyes blow up, but if we take this candle high, you got another fair value gap right here. And we can draw a gap on this one just like we did the one above. So in this range, there are two fair value gaps. Price is efficient. They come down here. They usually not trying to have to come back and have to hit it a whole bunch of times if they don't have to. Because price is efficient, they hit both fair value gaps with this move down, offering support. Okay, something I'll have you write down so you remember this. Fair value gaps, to me, the way I see them, is they are your true support and resistance. This is what I think. This is how I see it. You may disagree with that. This is how I see it, because if you do not have a fair value gap, the likely that range will offer support is very low. Michael teaches a lot of what he calls PD arrays. We're going to talk a lot about that as we get a little bit deeper down this rabbit hole. From what I have found, most of the time, there are exceptions, but most of the time for a PD array to work, there's going to be a fair value gap somewhere in that range on some time frame. Okay, so this is how I see it. Fair value gaps offer, in my humble opinion, you do not have to agree with me, your true support or resistance. Okay, so I'm just going to throw that on here. This is a fair value gap, and this is on the month. Okay, so price came down and offered fair value, offering sellers because people were selling this move down. The reason why I said price is efficient and that there is liquidity attached to fair value gaps. All of these candles have liquidity. Sell side liquidity. There is sell side attached to this candle. There are stop losses down here. When price came down here and hit this low and hit this low, so let's take this and we're gonna add another one down here. When they hit those lows, they took liquidity as well. Okay, people had stop losses here for this up move. Stop losses here for this up move because they were trailing their stop. Just like I told you about Apple We don't want to go below $10. We don't want it to go below 90. We don't want to lose more than 10. There's stop losses here. People put stop losses on these candles. So when those moves come back and it scares people, they get fear. Their stop losses get taken, and what does the market do? It keep going. It took their money. They became the liquidity to fuel the move. Okay? Thank you, Kim. I'm trying, girl. Okay, so it's that simple. It is that freaking simple. Okay? This isn't complicated. You do not need 50 million indicators. You do not need crossovers. By the time you get a crossover on this move, you miss the best entry because the crossover not happening until here. This is where we buy. ICT teaches us to buy down here, not to buy the crossover up here and assume more risk. You want to buy the liquidity. You want to be buying with the algorithm. That is where we buy. We buy the pullback. We don't buy. We don't chase. Michael does not teach us to chase. He does not teach us to have FOMO. He does not teach us to be led by our emotions. Okay? You're going to be buying when it feels scary because the market will be falling when you are buying, but that is where you want to buy. We buy at a discount. We go into Macy's and we go straight to the discount rack. We don't buy as they're hiking the price. We don't buy that. We do not buy premium. We buy discount. Okay? You want to buy the pullback. You want to buy the fair value gap. Is it all coming together now? You want to buy at fair value. Okay. So, again, I think I'm not going to go back through how to read a fair value gap. If you guys want to get it again, rewind the video back to that point. It was about 11 minutes back. Just go back and watch that part again. And you see it on the chart. But I'm going to give you guys some homework. Okay, so you got some homework. And we're going to talk about, this is the stuff we'll use every single time we talk. I just don't want to have to explain it from scratch every time we talk about it. So I need you to really use this video. You may have to watch it a couple times to get it. So you're going to need to understand fair value and liquidity, okay? But your first homework is, I want you to go to a 3-month time frame. That's one of my favorite time frames. I want you guys to get very comfortable with the 3-month because it's a lot of money on the 3-month. You get a lot of big moves off the 3-month. Y'all go, you start investing on the 3-month, you're going to be Gucci. You're going to make a lot of money. You're going to do very well. If you do this on the 3-month time frame, you just got to be patient. You will find so many opportunities to buy shares on the 3-month. But I want you guys to go to the 3-month time frame and identify a fair value gap. Okay? And I want you to draw what that fair value gap looks like. If you've been doing this a while and you know how to do fair value gaps, you don't have to do this. Okay? I'm going to give you a pass on this one. But if you're new to fair value gaps, I need you to go to the 3-month time frame, identify and draw a fair value gap just like this, just like I drew this green box. I want you to draw your fair value gap using your 3-candle pattern, taking the high, and if you do a bullish fair value, because this is a bullish fair value gap, I should have clarified that. This is a bull fair value gap because it's on a green candle. If it was on a red candle, it would be a bearish fair value gap. Okay? We buy bull fair value gaps. We short bear ones. We buy puts on the bear ones. So we short the bear ones. We short them down. We buy up the bull fair value gaps. Okay? Write that down. But I want you to identify a fair value gap and to draw that on your 3-month time frame. Use your 3-month. And you can do it on any ticker you like. You can use Tesla. You can use Microsoft. You can use NVIDIA, AMD. Who else we got? It's so many tickers out there. Just pick one. Do it on any of them. A 3-month fair value gap. And I want you to do this for a reason. 1, because I want you to see the opportunities on the chart. 2, I want you to be comfortable identifying it. And then as a bonus, tag me if you're on Threads, or if you are on Instagram and you put in your story, just tag me so I can see it, so I can see you guys do this, okay? I want to see it. So that is your liquidity and that is your imbalance. Those are the 2 things I wanted to cover today. So I'm going to go ahead and stop here. I hope this made sense. I hope you guys are feeling excited. Again, I want this to be simple. I want you to get it. I want you to have opportunities, you know. I think that this is so important. We're in an inflationary period. I mean, we always have been from a United States perspective, but if you're not investing and you're not taking advantage of growth like this, you're not set up to beat inflation. The people who are set up to beat inflation are the ones who are growing their money in things like the stock market. The stock market is one of the best ways to grow your wealth, to grow the money that you have. Okay? So I want people who look like me. I want to see my girls, you know, none against my fellas, but I want my ladies to be in here too. I want us to be represented too. You know, I want my people to be able to take money out of the market when you need it. I know right now, if I ever felt like, oh crap, I need to get a little bit of bread, I know I can go on them charts and I can find it. I want you to be able to do that as well. Fellas, I want y'all to do it too. Y'all are definitely represented as well, like right now, but I want y'all to do it too, because you know, we got to make it happen. And the benefit of this, and this is why I don't gatekeep, is that there's enough for us all to take. We can all get what we need to eat. If I teach you and you learn, or if we do this together and you make more than me next month, it does not hurt me not one bit. It don't take nothing out my pocket. It will not affect my trading not one bit. I can still get what I was going to get. It does not affect me one bit. That is why I do not pocket watch. I want good karma. I don't block. I don't gatekeep. I guess I should say not pocket watch, but I don't gatekeep. So I hope this was informative and made sense for you guys, and you got something out of it. If you haven't hit the thumbs up button, I would really, really appreciate that. You know, I just wanted to do this to help. I don't really see myself doing this for a really long time. So once I get to the end of what I want to show, I'm going to send you back over to Michael, you know, and I would love to see you guys get obsessed about this like I have. I love it. This is my passion. It's so much fun. So much fun. Even without the money, it is fun. This is great. It's like the most funnest strategy game you could ever play. You're going to love it if you love stuff like that. And if you feel intimidated by this, don't. We got you. Okay? You got friends here. So we're going to get this thing going. Something else I'm going to do, I'll create a group on what is it called? What's the name of that app? Oh, I can't think of it. It starts with a T. If anybody can think of the app and put it in the chat, I cannot think of the name of the app. What is that app called? I cannot think of it. Telegram. There it is, Telegram. I'll create a group in Telegram where you guys can talk together and study. And I will moderate the chat, but the chat is going to be yours for you to talk and to study together if you're interested. So I'll put that in the description box once I get it created. So just come back to that. Give me about a day to get it set up. And that way you guys can kind of chat and have somebody to study with so you don't feel alone. Hopefully you can find some friends and connect with others. But we'll do that to get started so that way you can at least find somebody. Because I know for me, finding my tribe made a very, very big difference in my trading journey. So with that, I'm going to go ahead and end here. Thank you so much for spending some of your Saturday with me. I really appreciate you guys. I'm sorry that I was a little bit late and had that issue with the OBS, but I'm glad you made it and stuck with me regardless of that fact. So thank you for your patience. And I will let you know when we do this again. I do want to get on a regular cadence of doing these. I will pre-record a lot of the videos that come up on this channel, but I do want to get in the habit of doing these lives because I think that they are also very effective. And it's just great for you to be a participant in the conversation as I'm doing it live. And I can see your chats right here while we're talking. So thank you again. And again, if you need to watch this video a couple of times, do that until you get it. Okay, do it until you master it, till you can do it yourself on the chart. But I hope you have a great, amazing weekend. And I will see you guys next time. If I can find my end stream button, because I'm stuck. Here we go. All right. I'll see you guys next time. Bye-bye.